All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I apologize for my voice here today. I woke up and didn't have much of a voice left, so we'll see. We'll see how far I can get here. Let's go talk about some of the reactions here in the market. What's coming into play? What's kind of happening here? As Carl talked, we had the jobs data here this morning. And with this jobs data, stock futures, which were up about three or four most of the night, they shot lower before the market opened. They came back and they've been relatively stable to slightly higher throughout the most of the day so far here. The major strength is coming in. Let me show you here with the regional banks. The KRE you can see up over 3% here. And beautiful trend rider bull signal. Very, very strong action here on the KRE. We've basically had a story rewritten. Yesterday we had Europe, and Europe coming in lowering rates, basically talking about some of the economic fears. And today, the jobs data coming in much higher than expected. It wasn't that the jobs data was, hey, this is great data. It was, what is this data relative to expectations? And if you come in here, and I'm just coming here to Bloomberg, if we come in here and look at the employment situation, you can see kind of what the consensus range was of estimates for the jobs data, minus 300,000 to 168,000. Average consensus 120,000. Coming in at 204, really hot. But what makes that number even stronger is the fact that prior months, the last 2 months, were both revised higher. August and September. In fact, down here it says the net revisions for August and September were up 60,000. So you have what has the Fed been saying? The Fed has been saying, hey, if we see an improvement in the jobs market, then we'll taper. Okay? So what's happening? Well, interest rates here today are surging. Here's the TNX. All right, interest rates are rising. Who is that good for? That's great for the regional banks for a couple reasons. Okay? It's great for the regional banks because the interest rates go up, which means they can make more money on the yield curve. So their profit, their bottom line profit actually goes up. And it's good for the regional banks because they're lending. And so if jobs are on the rise, if more people are employed, they're going to have less defaults on some of the housing. Maybe more houses are going to get bought, more loan processing going on for the regional banks. So it's a bonus in two ways, here for the regional banks, here for the KRE. Some of the ones that have some of the best action here. Here's Zions Bank. And you'll notice just the incredible bullish engulfings on these. Key Bank here, which we've talked about several times over the past month. And, continuing to run high and strong here. Even you get into some of the bigger banks, the Wells Fargo, that have some of these regional components benefiting Wells Fargo, Bank of America, in a very strong way. And these are incredibly bullish candles that we're seeing within these banks, the regional banks. Now, some of this news is affecting our position on Capital One, as banks are in general getting a lift. Capital One's not up nearly as much; it's still below our stop, but it is something that, if this story plays out through the rest of the day and we start to close above 70, not too great. You can argue that, hey, higher interest rates aren't necessarily great for Capital One, but with banks lifting, it's going to take all boats higher. Goldman Sachs with just about as good of a bearish signal, bearish engulfing yesterday as you'll ever see in the market. And pop in here today. and this has been one of the stories of 2013. And at some point that will change, but so far that has not been the case here. So this regional bank aspect is really what's driving the market, and where we're seeing much of the outperformance of the market here in the XLF. Uh, Overall, even JP Morgan. I mean, look at the bounce here in JP Morgan. This story just rings out for the entire sector, and it's not a story that's probably here today and gone tomorrow. Uh, this is this is a piece of data who, yes, the singular data point is good, but the revisions of the last 2 months brings a lot of confidence, and it's a story that's likely to play out for the next several weeks, and through the month of December, probably into early December here for these banks. So very very positive action within the banking group. So you'll notice Capital One getting up near our stop. We will we'll continue to keep an eye on that. MGM here getting a little bit of a bounce. Uh, Kay, I believe it was you asked the question of why I went out and did December options on MGM. And just simply because of the action we've seen in the market. We've not seen incredible follow through on sell offs. We have seen some, back here in June, we've seen some of that, here, but with MGM, are we going to get a bounce? Are we going to get that? And so that's kind of why I went with the December, just to take some of the delta off of the trade. Or the overall risk reward. You'll notice here, and MGM looks like many stocks, right? Outside of that regional bank area, where they have the breakdowns, we're getting a little bit of a spike up as the banks lead the market higher. How does this play out the rest of the day? You'll notice it's not a whole lot of volume at all on the rise. With it, really the volume that we're seeing come in is all in the banks, and so this is a product of the banks leading things higher here with MGM. So that's kind of why we did that. John, you asked, should you exit Bank of America? Yeah. Now, well, 14 was the stop on that. You're now 2% above that. If I were in Bank of America, I'd wait for a 10-cent pullback here. You're probably going to get a 10, 15-cent pullback sometime today, but probably not much more than that. And you may not get the 10-cent pullback until Bank of America hits 14.40, 14.45. Okay, so 14, that stop level. I'm assuming, since you asked that question, that you missed it, but overall there, I don't give any Bank of America puts very much hope here. One of the other things that we're seeing in this market today, we're seeing kind of the IWM. We're seeing the IWM outperform the S&P, outperform the Dow, taking off some of the underperformance. This pattern here on the IWM, okay, this is a pattern that we've seen several times even this year. Just take a look back here in June. We start to get the sell off. We get a little bounce. We don't get great follow through to it. We actually kind of get a little bit of a breakdown, but we kind of go into a little bit of a range bound situation. And we've talked about the seasonality here for mid-November is typically lower, typically downside seasonality. Perhaps for this market with some of the change that came in here today, the best we might hope for, from a bearish standpoint, is for consolidation. From a bullish standpoint, you still have that upside potential coming into play, and You have a buy the dip type mentality that may permeate the markets and kind of go through here for heading into the weeks to come. Now this is very short term. We're only an hour into today, but the data here this morning, there's a game changing effect to that, or not game changing, but game continuation. For the bulls. Okay, look, the one thing about the bull market here this year, bull market has gone up on all news, good, bad, indifferent. It's gone up on news. It doesn't care what that news has been. It doesn't care whether that news can be perceived as bad, indifferent, good. It's gone up on all news. And, that continues to be a big feather in the bull's cap as it continues to make higher highs and higher lows. And you can make the argument that, hey, this is all the pullback that the bears are going to get after some of the game-changing nature of the news here today. Before I'm ready to kind of be comfortable with that, I'd like to see where things kind of move and close here today. But I don't expect that we'll see a very sharp pullback overall here in the markets. Take a look here at Capital One. Moving higher here, up towards our stopping point. Let's take a look here. So the options hit about 160. We'll kind of be at that stopping point, and we'll look to pull it off here. Capital One, if the options start to hit about 160. So we'll see. We saw it come up to this level here yesterday, play around at these levels a little bit, and go up. A couple stocks that making fresh, kind of giving the bulls a little life here today. Starbucks, which has had a hard sell here, broke 80 yesterday, snapping back above 80 here today. Those of you that like to trade Starbucks higher, this is a very interesting entry point here for Starbucks to the upside. Google, which had been breaking down a little bit, coming down near 1,000. The one thing I'd like to play Google higher. We see Google break back above the 7. Would give us a nice opportunity to play it higher. We talked about Chipotle Mexican Grill yesterday. That every little bit of sell off is a benefit for the bulls to buy in cheaper. We get a nice close on Chipotle. There'll be some nice trade opportunity. To go in there. Okay. Look, and Doug, you make a good point. You're going to go broke with all these tips on what to buy. Look, I'm showing different things. Not, please, to be in more than 2-3 positions in this market right here is ludicrous. So if you're going out, I'm really kind of showing some of the stocks. I know some of you are following and trading. These aren't things that you have to enter or push into there and go after. Okay. But these are just some of the things. If my hands were tied, I had to buy one thing here today, I would buy into the KRE. This is a story that will likely have legs to continue. You can go with the KRE or Key Bank or something like that. If you're playing with the Googles and you're playing with the Starbucks and you're playing with the Chipotles of the world, it's for those of you out there that are the ultra bulls. These are the things and these are the pullbacks. You get the opportunities that you can run with. Okay, I know some of you like K out there, you ultra bears, right? You're looking for only downside type of a thing. This morning, are there some downside setups coming in? There's some downside potentials coming in, right? You have IBM here today after yesterday's hammer gapping down, creating a little tri-star pattern, in a downward trend. Okay, so you have a decent setup, but so far even the lukewarm bullish setups have worked. some of the best bearish setups haven't. In fact, some of the absolute best bearish setups, just have not been, not been working and putting in play. Please, there's no reason to get aggressive, in this market, outside of your comfort zone. Zero. Absolutely zero. In fact, you're probably not going to see me jump into very much here outside the MGM and the COF. You're probably just going to see me wait until the next challenge where I know where my risk is. I know what I have to go with, and start fresh and push up from there. There's no reason to take any individual day on the market and say, hey, you know what, you have to jump in and all around and reposition everything on one individual day. Those of you who are in the IWM from a put standpoint, this has been the most common question in my email this morning: what to do with this? And at this point here, you have a decision, right? If you look short term, you're making lower lows and lower highs. To see this thing turn and roll down another buck here into the close today would be very logical to say. Would be extremely logical to say. Okay, and so overall here, it I can't give a great exit. 109, you hold 109. Those puts still have play. But in this market, we've seen these type of setups just surge. Okay, Newbie asked a great question. You said the market goes higher and bad and good, both type of news. Why are we in puts only? Right? We're not. I mean, we played calls on the TLT, on the silver, on the ABX. Right? It hasn't been a only puts type of environment at all. Why are we in puts right now? Because as with Conoco and MGM, because at some point, and we've seen markets like this. We've seen markets that go up on good news and bad news, and we've seen markets that go down on good news and bad news. Typically, those type of markets last for 4 to 5 months. This one has now lasted 8 to 10, almost into the 12-month period. It has been a bull market that has defied much of the logic. Continues to be strong, but it has gone outside the norms. And the last time, let me show you. Let's come here to the S&P 500, SPX. Sorry, I want to make sure keep it on the Capital One here. But the S&P 500, let's come here to 2011. Select start to end. Let's go 2011. Again, I apologize for my voice. "2011 was a very interesting time, and very similar to 2010. In fact, 2010 hit a period where people were questioning: is there anything that can make the market go down? We've had a new bull market start. We have Fed kind of backing everything. There's nothing to make the market go down, and that's right ahead of the flash crash. Right ahead of the flash crash there. Okay. Then here in 2012, we have a market that had been going up, going up, going up. We started to have a little bit of weakness come in here May and June, and we had this little surge right here. June, July, Fed, quantitative easing, all of that talked about, was being rolled out brand new. Europe was getting some of their problems under control, and everything was hunky-dory. And we started to see the markets actually fall and break down. There was no news. In fact, there were a lot of people questioning, this is just a buy the dip thing. Very similar to where we are now. Market has been able to go up on all types of news, good news, bad news, indifferent. It was going down on no news, and it starts to flush. There's no news. There's no news until right here, till around 12:50, and then it's Europe, 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 and flush. Right? It goes from a no news or from that type of environment, and it's these types of environments that historically have seen the hardest flushes. Okay, that have historically seen the highest flushes, and so you can go through 6 months of frustrated trading, one signal, one decent flush, you erase all of it. Okay, and that's what options allow you to do. Okay, and so newbie, as you kind of mentioned, that's why. That's why I position this way. And I know not all of you are doing that, and I know it can be frustrating. And look, I don't expect you to have to follow it all or to go in, but I'm gonna stick with what historically, from a long term standpoint, continues to work for me. Okay, and absolutely, I have higher expectations, but I also know the reality of the market and what it is, and what it can do, and that data comes in a little bit different, or the reaction's just a little bit different, and we're looking at a market that's down 20 points today. The whole story shifts and changes, right? The whole story absolutely shifts and changes there. And even by the close today, we can see the story absolutely shift and change. Okay, but one of the things, if you go look historically, you know, if you go look historically, the markets that see the strongest sell-offs are the markets that have no reason to sell off. And this has been a market where everyone's questioning and saying there's no reason to sell off. Okay, where they're saying there's absolutely no reason. And so I'll continue to kind of look more from a bearish side. Not that I won't play anything upside, right? But all the signals yesterday, all the signals over the last 2 days have been bearish. Okay, today is where the signals are reversing. Okay, today are where the signals are reversing. All right, I want to talk a little bit about Twitter here. Twitter is been asked about Twitter several times. I believe, Max, you mentioned that Twitter. Someone talked about the star candle yesterday. Yeah, I mean Twitter. There's no candle analysis to do here. Okay, there's really just no candle analysis that you can do on Twitter. No technical analysis you can do on Twitter. Okay, there's absolutely no technical analysis, which is why I stay, kind of on the sidelines when it comes to these IPOs. Okay, with these IPOs, but the question going out with Twitter is, what's it worth? Okay, what is Twitter worth? What's the valuation? And you hear analysts and those and the different things you see. They're talking about the overall long term valuation of Twitter. What does that mean? Well, take something like Exxon. Okay, ExxonMobil. If you look at the market cap is essentially how many shares are out there times the price of the stock. So essentially, theoretically, if you wanted to go buy Exxon Mobil today, you wanted to buy the company, you'd have to pull about $407 billion out from under your mattress, and you can go buy Exxon Mobil. Okay? So, Facebook, the biggest questions have been, what's the valuation? Well, here's the market cap on Facebook. Okay, 116 billion. It's doubled in the last little bit. Okay? Well, with Twitter, this is what people are trying to assess. What is the value of Twitter? What is the value of that company? Are they a 20 billion, a 6 billion, a 40 billion dollar company? And the opinions and the thoughts on that are wide ranging. They're all over the map. But that's what the argument's about. So if you're buying Twitter, you're on the side that thinks that, hey, the market cap for Twitter should be much higher. If you're on the side of selling Twitter, you're on the side of saying, hey, the market cap, doesn't come close to justifying, the market cap's way too high. That's what Twitter is based off of right here, not really based off of any technicals. It's that kind of fundamental aspect, that it's really being based on here. Okay? So that's my 2 cents here on Twitter. And options on Twitter won't open till next week. Okay, it still doesn't have any options, so they won't be open till next week, and we'll go at that point. Then they'll be tradable. One of the things that happens, even if you want to short something like Twitter on an IPO, most brokerages they will increase the margin cost. So when you short a stock, you're shorting it on margin, and your broker is going to charge you money for that. Okay, and so the money on that margin or the margin cost will go up for an IPO or for a stock where there's going to be a lot more overall volatility. Okay. All right, one last thing here as I'm looking at my email. I'm being asked about Kihu. Um, if you look at these China names, they're not bouncing, and the question is, since they're not bouncing very much, are they shortable? Okay. I mean, yes. I mean, they had the downside signals. They have absolutely had the downside signals. The trend is breaking. The trend is weakening. Are they shortable? Well, right now you have Harami action. You have Harami action coming into Kihu. Last time we saw a breakdown on Kihu with Harami action here at the beginning of October, we saw a strong uptrend, and most of the Harami action we've seen off of these strong downside candles has been met with a lot of buying. So, yes, there are strong downside signals. You have complete breakdowns and things like the MACD and stochastics and whatnot. You have major breakdowns, but in the environment we're in, if you're going to trust it, trust it just a little bit. Just a little bit, not a whole lot. Just a little bit. Let some of these downsides start working, before gaining a lot more trust in those. Yeah, RT. Am I looking at any setups this morning? Yeah, we talked here about the KRE and the game changing here with the regional banks. And the action on the regional banks, I know they're up 3.5%, and I wouldn't chase them right here, but by day's end, by Monday, you'll probably get a pretty good chance to chase some of these. Key Bank up another $2 from here. There was a game-changing story here today with these regional banks. Okay, and they're the ones kind of leading everything, and it's putting positive pressure on the things like Goldman Sachs and whatnot. I would not be a buyer of Goldman Sachs over KeyBank. If you're looking to be a buyer of a bank, I'd much rather buy Key or the KRE than something like Goldman Sachs. Goldman Sachs, JP Morgan, sympathy bounce a little bit here, okay, more than anything. But I'd rather buy the regionals than the bigger banks. But the regionals are carrying them higher. Excuse me. I talked about value click. Uh, Excuse me, 1 second. Okay, I apologize for that. Don't want to cough in the in the microphone here. Okay, 1 second. I'll be right back. I'm gonna go grab some more water here. All right, we're good. All right, so value click VCLK. I mentioned this morning for those of you that like some of these trend rider, downward trending stocks, really good volume, breaking higher in a trend rider form. Very very positive action here on value click. Very interesting setup outside of outside of the financials here. Okay. Yeah, gold looks to test year's low. Gold still getting hit here by the UUP, the rally the rally here in the dollar. Getting a nice surge here. That's going to push pressure on gold. And yeah, I mean, this 122 area, 120, between this 125, 122 area is significant support here. You do have a potential downside head and shoulders pattern forming on gold to where if gold starts to break 122, it could be extremely negative there. Okay. Yeah, W. You make an interesting point. You say I found this market to be hard to read this year. Pretty new to the market. Is this normal action? As far as technicals go, okay, as far as technicals go, and many of you have asked me, hey, are the technicals just not as accurate? I've gone through, and I can't hide it. My last 6 months trading, my trading's just not been nearly as good. But one of the things about it is it's not because the technicals aren't working. The technicals overall have been working. The bearish patterns have not been nearly as accurate because of the overall bullish market. But the technicals have been working, the vibe and the bullish trend riders. What hasn't been working are the ones that I've picked. And that's one of the frustrating things. Let me show you I can show you some examples. I'll bring those out a little bit later. But overall, when I've had three stocks making the exact same signal, okay, and all doing the exact same thing, even just go back to Honeywell back here, okay, and every stock making the same downside like signal. I'm in Honeywell. Well, Honeywell gets some news, jumps $3 the next day, while many of the others that were given the downside signals at the same time continued lower. And so, for me personally and the trades, as I go back through and look at them, I go back and I look and say, okay, you know what? These are the trades that were out there on the board. In general, the accuracy percentage has been pretty good. My individual picks, where it's, hey, flip a coin. Do you want Chevron or do you want Halliburton? It's been hit with a lot of different news, from Boeing, from being long Boeing and the plane catching on fire. There have just been analyst upgrades, downgrades, and those are part of the game. And normally those even out, but they haven't evened out for me. And it's been one of my frustrations overall. But I also know it's part of the game. It's part of what's there. Some of you have sent me some glowing emails about, some of the trades you've been in that we've talked about and that have worked really well, and I love getting those. Ironically enough, it's, I'm talking. Well, look, the other day, we were talking about Yelp, right, and Capital One. Okay, Yelp and Capital One. Well, we get into Capital One 2 days ago. Yelp tanked 6-7% yesterday. Right, and that's it's not been the signals. It's been when you have a basket of stocks creating a signal. In this market, I've just not picked the right one. And there's been markets where I've been fortunate and I've gone on streaks of picking 13 out of 15 or those types of things. So yes, going back to your question, is the market hard to read? Is this normal action? It's not normal action in the sense that it hasn't been nearly as volatile. It's not been nearly as volatile. And most of the time, traders, your newer traders tend to thrive in markets that aren't as volatile. More your seasoned traders like more volatile markets, but everybody's a little different. With today's drop in the VIX, due to the middle of the month dynamics, is now a decent entry. Wick, if you're one of those guys, if you're one of these traders that hey, you think, hey, there's going to be some significant downside, you want to put some money on that. Yes, it is. It's a nice little entry point here on the VIX. Okay, but you're playing that thesis, and with some of today's action, it may not play out as much. Okay? As far as good setups in the VIX, and buying into the VIX, to trade the VIX from a technical standpoint is very difficult. Okay, to trade it from a candle standpoint, to say, well, you know what, you have a bullish engulfing, or bearish engulfing, or a gap, or something like that. The VIX isn't going to react from a technical standpoint. Doesn't trade real well there at all. Okay, if you're playing the VIX, the way you need to play that is generally give yourself some time. I generally want to be a buyer of the VIX calls when the market's pretty high and could have a pullback. And I'll generally give myself 30 to 50 days, give myself plenty of time, and go in the money. So, me personally, outside of Trader Minute, yesterday midday, I picked up some December 13 VIX calls. I only put in what I'm willing to lose. I'm not putting a stop. They go broke or bust. They go broke or boom or bust, right? And no real expectations. But I know that worst case scenario, I lose $2. Best case scenario, we get the VIX just go back up to 19. I'm looking at something that's at $6, and so I have a lot more reward potential than risk potential. And it's something that over the years I lose more than I win in regards to, I have more VIX trades that go worthless than VIX trades that pay off. But over the years, the VIX trades that have paid off have been a lot more profitable than anything I've lost. The flash crash helped with that. Some of the action in 2012, well, even some of that 2011 pullback helped, and heck, even some this year, where we got the surge in May on the VIX was nice. So. All right, so taking a look here at Capital One. Well, let's say TLT. Okay, TLT for the site here today. We're going to close this out. As far as for the site, I'm not going to sell the options in my account, just simply for the chance that maybe something crazy happens, but I don't expect it. But we're going to wrap up the last challenge. That way, we can get the data, put it all out there. So that those of you coming on for the next challenge see the results of this current challenge, so we can get those out on the front page. So we're going to tie up the TLT here for that purpose. Also, SLV here. Okay, not going to exit this trade. We have a 21 strike. Something crazy happens on SLV. It's not going to take a lot for the value to surge. Why do I say if something crazy? Well, I don't expect something crazy, but you see these one-day surges in the SLV, during even down times. Yeah, if we get one of those, we get lucky with it. Fine, we'll pull it. We'll move on there. But as far as any expectations, there, none. Let's go to the two trades that are alive and strong expectations with Capital One. Okay, this is one that I know was a little bit frustrating yesterday as it traded higher most of the day, gave up into the close, continues to hold in there, continues to be in a good spot where we would expect that breakdown. Above 70 changes that story. So, as long as we stay below 70, uh, we're happy with that setup. MGM, is the same thing. We're getting that low volume, little snapback rally, back up to the 7. There's nothing that's changed about the overall trajectory here and expectation for MGM. 1925 is the point on MGM where we say enough is enough. If we are able to trade here today below 19, Monday below 19, we start breaking into 18 and a half and lower, we will drop that stop down to 19 instead of 19 and a quarter. Okay, but with MGM, 19 and a quarter is that point. Okay. All right, a little bit later here today, I'm going to talk about stops. I want to talk about stops in depth. Have had several requests to talk about stops. I'll show you kind of how they're used, how different people use stops, how I look at stops, and show you what stops have done overall here. So we will talk about that in a little bit later here today. Goldman Sachs here, Vaughn. Goldman Sachs getting that bounce with the rest of the banks, not having the follow through to the absolute perfect signal yesterday. Just absolute perfect signal, right? Absolutely perfect with the puts. With being in the puts here, from a stop point, the stop's 164. We've seen a lot of resistance at 163, so I would want to see 163 hold by the end of the day here today, so that lower resistance kind of kicks in. It holds below 163 today. I think you still have a good shot with Goldman, and just counting today as a sympathy bounce because of the regionals. It starts to trade back above and hold and close above 163. The bearish signal is probably going to get wiped out completely. Okay. PW still in ABX. Yeah, I mean we still have the ABX here. Right? I mean this was an all or nothing trade when we got into it, right? Just an all or nothing from that moment. Okay. And really, there's no reason to cash out of it. Maybe we get lucky. Who knows? But I would not be adding to ABX here. The chance of it trading above 1850 are less than 0.5%. Okay. Matt, MGM. One of you was asking about it this morning. You have a better risk reward here on MGM, right? If you pull this up from an hourly perspective, bouncing up here to 19, getting that sympathy bounce, using 1925 as the stop, the risk reward's fantastic. The downside signals, the downside triggers are still all there, all in play for MGM. I know MGM's up a little bit here this morning, but all the downside is still in play here. Yeah, my voice is rough. My voice is really rough here today. I apologize for that. Woke up and it just didn't wanna work like normal. My wife was happy, but XLE here, XLE 86. We should see XLE hold this 86 area. When you look at the components of XLE like Exxon or Chevron, Schlumberger, there's not a new bullish signal coming in to these stocks. Okay, so it's not like there's a fresh bullish signal being created. With the KRE or the regional banks, you're getting fresh bullish signals. With many of the other stocks out there in the market today, you're not getting fresh bullish signals. You're just getting little relief rallies. Okay, and that's what we're seeing. Could it turn into a fresh bullish signal? Yes, but I look at kind of XLE the same I look at Goldman Sachs. You get XLE closing below 86 today, you're good. Goldman Sachs, you get it closing below 163 today, you're probably pretty good on that. Okay, you're probably pretty good on that. All right, well, thanks for hopping on. We'll be on chat here. Any questions, let us know. Again, you'll see a calendar posted here today. Starting Monday, we're going to kick off Education Week. For many of you, you're going to care less. For some of you that have been requesting it, you're gonna like it. But we're gonna run 8 classes. 4 of them that will happen during market hours from 9 to 9:30. Okay, and 4 of them that will happen after the market. All classes though will be recorded. They will start out with, hey, how to set up a brokerage account. What are some of the basic tools of trading? What are some of the basic concepts and thoughts, and go into option pricing, risk reward, trade management, how different people use options out there in the market, and really kind of get those of you who I know have come on who really only have a stock background, no real option background, get you up to speed with the options in time for the kickoff of the next challenge. Okay. Yeah, Trade Hound, they'll be at 9 o'clock Mountain Time with an asterisk beside that. Okay. With, if something's going on in market, we need to trade, something change, talk about, we will bump that class just a little bit in that situation. Okay. The other ones, I believe, and the schedule will be put up here today. I believe they will be at 4:30 Eastern time on Monday and Tuesday, and then on Wednesday and Thursday they'll be at 5 o'clock Eastern time. But again, they'll all be recorded. They'll all be put into the. They won't be in the video library. They'll be put in their separate bank, and be ready to go. Okay. Yes, PW. The candlestick videos are in the trade library. If you can't find them, let me know. Also, the top picks of the day that has this coming soon button on it, or notice on it. Carl's been doing those, the top 3 of the day. That should be in there by the time you log on Monday. So we're excited to have that in there and running with that. All right. Well, thanks for hopping on. Any questions, let us know. And again, I'll be back on. I want to talk about stops here with you a little bit today. Probably in about 2 hours here. I'll hop back on and talk stops. Thanks for logging on. Talk to you soon.